Welcome back, everyone, to the Risk Intel podcast, powered by SRA Watchtower, where we share risk intelligence with experts from across the banking industry. I'm your host, Ed Vincent, CEO at SRA Watchtower. Welcome back to the Risk Intel podcast. I'm very excited to welcome back Ian Moloney from the American FinTech Council, and welcome for the first time Hayden Cole, also from the American FinTech Council, to the show here today. I'll give Ian and Hayden a moment to introduce themselves, but we're extremely excited for them to share perspectives on the recent events in the election here in the U.S. and the implications for the financial institution and fintech market. So, Ian, before we jump into the content of the day, perhaps you could give folks a little bit of your background and then Hayden, how you jump into this.
Sure, absolutely. Thanks, Ed. I'm very happy to be back on the program. I enjoyed the first time that we got to chat and had some fun. So thanks for inviting me back. So yeah, I am the Senior Vice President, Head of Policy and Regulatory Affairs at the American FinTech Council. So essentially everything under the sun that goes for fintech policy, of which there is a lot of work to be done, that falls under my remit. Just for a bit of background, I spent a number of years at the U.S. Government Accountability Office, focused on financial services, particularly on fintech work, but also small business lending and other things of that nature. And then went over and worked actually with Cross River, doing their policy and regulatory affairs, and had a great time over there. But joined my boss, Phil Goldfeder, who I think has also been on the program about a year ago, and it's been lightning speed ever since.
Certainly not a dull moment. You arrived at the right time. Ian, thanks very much. Hayden, share us a little bit about your background as well.
Yeah, Ed, thank you, and thank you for having me on the podcast. I know Ian and I are both excited to be here, and there, as you said, is a lot to unpack after last week. Hayden Cole, Director of Federal Government Affairs at the American FinTech Council. Under that, it's everything that Ian said, but more on kind of your legislative side, being the translator for the American FinTech Council to the folks on Capitol Hill. And after last week, there's obviously a lot of changes, both on Capitol Hill and the administration, and lots of implications in the financial services and fintech sector. Prior to AFC, I was at what was a community bank that then got into embedded finance based out of South Dakota. And so have some political background with some of the fintech and the embedded finance background as well. So like Ian, just excited to be here and unpack the events of last week and what it's going to look like in the coming weeks, months, and the next 4 years.
Well, I think that's a great jumping off point, Hayden. Thanks for that background. Right, you guys obviously have been very busy, right, to say the least, over the last several months here in monitoring what has been going on leading up to the election, and now with the election results in hand, what happens next. And so I'd love to start there with giving folks a bit of a roadmap, if you will, as to what to expect. Right, I appreciate all the election results are not kind of fully tabulated and logged quite yet, but we know a lot. What happens next? How quickly will we see change in behavior from the regulators? Right, we saw some letters that were sent today or this week, right, from Senator Cruz and Congressman French to regulators. So I'd love to help our listeners understand what happens first, what happens next, and how quickly do we see potential changes in behavior from the regulators.
Yeah, so I'm happy to kick things off on this. I think, as far as the way it breaks down, you've got sort of communications, policy changes, and then, also sort of broader, more long-term sort of oversight activities that I think are up for some modifications. But first off, on the communications front, as we've seen, there's really been, from both sides, from the departing administration as well as the incoming administration a lot of messaging around, for the departing administration, it's a lot of messaging as far as, this is our legacy, this is what we're trying to instill, and setting themselves up for their next go, within the next election. And then, on the other side, for President-elect Trump and his, incoming administration, he's identifying, short lists of individuals that might lead agencies. He's thinking about the various, policy priorities a little bit, but I think right now it's still at a very high level, and that it'll continue as the nominees are actually identified and confirmed. Then there will be more of a focus of, and more of a clear path forward of what this administration is going to look like, because at the current state, it's very, the headlines have been very focused on the deregulatory regime and sort of looking back. And I think that's accurate, but it'll become very clear once we've actually got folks in those seats of power, how that'll actually, will out. And so, I expect a little bit of a lull once, January rolls around, in between the, the leaving of some administration officials from the Biden administration and the forthcoming, confirmation of the Trump administration's nominees. But, that'll be, again, sort of just a quick transition period for some, a little bit longer for others, and then we'll see how things go. On the policy side, I think there's a number of initiatives that, are up in the air right now. I think given the fact that we're in a trifecta, so, the Republicans control the House, Senate, and the executive, then that sort of shifts how the departing administration sort of sees the world and what they want to put forward, because ultimately we're definitely within the window of the Congressional Review Act, which means that any finalized rule will be up for congressional review and could be invalidated, and that would limit the ability for future administrations, if they are to turn back Democrat, to really engage with those issues. So I think that's giving some of the regulators some pause, and there's been some very active regulators in this space, but actually, having that trifecta is causing them a little bit of concern. It doesn't mean we won't see anything finalized in the lame duck, and some of the letters that you mentioned, Ed, I think are pretty pro forma and, indicative of the way both administrations, when they come into power, both parties sort of see the issue. But there will definitely be some pause around the regulatory speed with which we've seen over the past 4 years.
I think it's an interesting point there, with the implications of the Congressional Review Act there, that it's not it can't be a scorched earth situation, right, where the departing regime is going to enact these policies or programs that then even if they get overturned, right? I think your key point there is that they can't come back and revisit them at that point in time, right? And so that is a great check and balance on that entire situation.
Yeah. And I think a great example of this is actually in the earned wage access space, because you've got the proposed interpretive rule, and recognizing this is an interpretive rule, though I think that there's an easy path forward, or somewhat easy path forward, of seeing it if it were to be finalized, that you could have the GAO weigh in if the Congress asked them to see if this is an actual, should be a rulemaking. I think due to the dearth of regulation at the federal level in the earned wage access space, that it would be ruled as a formal legislative rulemaking, and not necessarily an interpretive rulemaking. So then it would be subject under the Administrative Procedures Act to the Congressional Review Act. It could be CRA. And so if that occurs and that rule is invalidated, there is an ability for the Bureau to re-engage with that issue, but they have to pass a rule that would not be considered substantially similar to the rule that was invalidated. And so that kind of puts the Bureau in a bind if they were to pursue something, moving forward, because there's not really a way that they could establish what was in the proposed rulemaking of, establishing earned wage access as credit and applying different TILA requirements associated with it without being substantially similar. So it really, it stymies their ability to move forward with that rulemaking in any capacity. And since it's not through statute, then there's not even that manner in which they could engage with the rule.
Maybe a related question here, right? You talked about the a few different groups of action for communication, policy, oversight. It feels like then maybe the implication from a kind of a risk management perspective is you should not expect any major shifts in the interaction which you have from an exam and a supervisor and an oversight perspective, right? You talked about the fact that there are going to be some leadership changes, right? Some of those will be appointed, right? Some of them will be just the natural course within Congress, right? Of kind of gavels being passed over from one to the other. But there's still time before that occurs, right? So our financial institution should expect that it's going to be, to a certain extent, the status quo here in this transition period.
Yeah, and I'll say on the examination side, and I think Hayden can talk about more of the congressional oversight piece, but on the examination side, I mean, these examinations are meant to be apolitical. They're meant to be carried out by, the career staff at a prudential regulator or, a market regulator. And they're not supposed to be pushed and politicized in a, significant manner. And so there's a number of exams that are underway. They're in process, and they'll likely proceed as they're supposed to. The area where I see there could be some shift is that within the past few years, we've seen a lot of formal enforcement actions occur against, banks that were partnering with fintechs, and we've seen that kind of be laid out in due time. And so what could occur is that you have, instead of formal enforcement actions push, you have more of the matters requiring attention, matters requiring immediate attention, which are confidential supervisory, pronouncements to, in the course of an exam. So in the public sphere, we won't see as many examination and enforcement actions. It will seem to be very deregulatory in that sense, but there will still be some regulatory scrutiny associated with the examination. So I don't think we're necessarily out of the woods, and nor should anyone think that, this new administration is just going to solve all the issues. You still have to do, good risk management practices and be looking to, in this new administration, find ways to actually engage with your regulator even more.
I'd like to perhaps unpack that the concept here of the novel activities and the fintech relationships, right? The embedded finance, banks. And the fact that, and maybe this is kind of a lead into a broader question, which is, right, are there key regulatory or policy changes that we anticipate, that you anticipate occurring based upon, right, what we saw during the last Trump presidency, right, what you heard leading up to the election, and now that we've got the election outcome. One of those areas, right, undoubtedly will relate to fintechs and novel activities and the oversight of novel activities. But any thoughts kind of on, thematically kind of key regulatory and policy changes that you anticipate occurring, right? You mentioned earned wage access is one of those areas.
Yeah. So, it's always important to remember, while fintech is my everyday, it's Hayden's everyday, it's our collective everyday, it still stands in the broader picture of financial services. So some of the larger headline pieces for, for the industry are like Basel III and credit card late fees. And I think those will take priority over some of our issues, but that doesn't mean that our issues are not going to be on the table at all for any policy shifts. It just, what really it comes down to is where the departing administration, the Biden administration, leaves things versus where the Trump administration picks them up. So for things like brokered deposits, which is at the proposed rulemaking phase, earned wage access, that's also in a proposed manner. If those are not finalized, then it's much easier to kind of put those things back on the shelf, make them inactive and just not move forward with that within your regulatory agenda. Then there's larger pieces like Dodd-Frank 1033 and the personal financial data rulemaking that came from it. And that, since it's been finalized, like that's now subject to CRA, but there's other issues as far as the outstanding litigation that was brought forward by Bank Policy Institute and the Kentucky Bankers Association, and that all really throws it into a little bit of an unknown. But there's also been discussions around, the Bureau, if the Trump administration's Bureau wants to put their sort of stamp on that issue, they could re-engage with the rule, put out a modified proposed rulemaking or proposed rulemaking that would modify the final and, engage with it in that capacity. And so, ultimately, I think for the folks that are on the ground, it's important to recognize that the proposed rulemakings and the statements and things like that, a lot of the non-binding guidance that's come from the agencies over the past 4 years, that is easy to move out and to shift. So that's where, if they're looking for an area where they need to really pay close attention, that's where they should be paying attention. On the other side, the final rules and things like that, that's a process, and that you'll be able to kind of take it's naturally slower, so you'll be forced to watch it happen at a snail's pace based on what they're probably used to in the innovation world.
My follow-on to that was going to be what can financial institutions do to prepare for this? And it sounds like to a certain extent it's a little bit of is be patient. But are there other well, let me pause on that question. Let me actually pick up on another theme that you mentioned earlier. Hayden, I'm going to come to you, I think, on this one, because you talked about right, changes in leadership and congressional oversight, and we know that some of these appointed positions need to be approved and so forth. But in other spots, right, the gavel is gonna change hands. So Hayden, from your perspective, how significant is it to see new faces coming into some of these chairs, and what does that mean to the financial institutions themselves?
No, it's a good point, and regardless of who on the Republican or the Democratic side is going to ultimately rise up to be chairman of House Financial Services Committee, or if Elizabeth Warren is going to be ranking member, we're getting new people holding the gavels in both the House and the Senate and their respective committees. On the House side, we're seeing Patrick McHenry, who has been chair the past few years, and Maxine Waters before him is retiring from Congress, and so we have a four-way race there right now, with Representatives French Hill and Andy Barr looking like they are leading the pack. And obviously they are no strangers to fintech, to community banking, to any of the issues that your listeners would care about. And so we won't know the result of that until it looks like the first week of December, but either of them are going to have obviously a strong interest in the oversight functions, the regulatory, agencies, and the future of that. But we've also seen, for the first time, a fintech subcommittee, which French Hill chairs. We've seen Andy Barr speak at a fintech conference hosted by Representative Mike Flood in Nebraska a few weeks ago. We've seen them hold a field hearing on fintech. And so we've seen an interest from these members on the bank-FinTech partnerships. And so I think for membership, that's really exciting. On the Senate side, we're seeing Sherrod Brown obviously lost his election in Ohio, and so he will no longer be chair or ranking member. He'll be out of Congress. So we're seeing Tim Scott of South Carolina is going to be holding the gavel in the Senate. Scott has not necessarily been a huge player in the fintech space necessarily. His main largest recent proposal was housing, and I think that's an issue that basically all four sides, the House, Senate, Republicans and Democrats, are going to focus on. And so with housing, with tax issues, which folks may also have heard is going to be a huge issue next year, where fintech and the bank fintech relationship falls on the totem pole there may be shifting, but it's important to have a proactive strategy and to be engaged in those areas. And that's what AFC has done. Particularly, Ian mentioned earned wage access. We've seen an EWA bill proposed by Representative Brian Stile of Wisconsin made it through a markup in House Financial Services earlier this year. Seeing if that can gain any traction, and we are on the ground advocating for that. Or whether it's something like the Fair Exams Act, which was co-sponsored by French Hill and Representative Meeks of New York, a Democrat. Seeing whether these issues can get traction and being in the position on the ground as AFC is to push them forward for our own members' interests will be hugely important. But I think what we also have to remember is that this is going to need bipartisanship in a lot of these areas to pass. With the filibuster, getting 60 Senate votes to invoke cloture on something means that these have to be bipartisan solutions. Folks might remember S-2155 and some of the rollbacks of Dodd-Frank back in 2018 had to get 67 Senate, or it got 67 Senate votes. And so whether it's fintech or if something like crypto would take priority, we're going to have to see these things achieve bipartisan consensus in order for them to eventually reach President Trump's desk. And so AFC is monitoring, the various races for conference chair, for committee membership, because that'll shape a lot of what the conversation looks like.
Thanks for that, Hayden. I think that if I try and bring all that great content and perspective together, right? What it sounds to me like is that there is an increasing appreciation for the value that fintechs can bring to community banks, and potentially increased openness to responsible innovation. Obviously, that is a key phrase for the American FinTech Council is advocating for fostering responsible innovation. And it sounds like given the anecdotes you shared there about French Hill and Andy Barr there being there out of the Mike Flood's event, you've got folks that are leaning into innovation as opposed to I'll say holding it back. And I think that the implication for many of our listeners who are in the risk space is that you're going to have to get on your front foot here, because if you don't, you're going to miss an opportunity, because it's clear that perhaps some of the constraints are not going to be quite as burdensome, and so folks will lean in here, and so it is important for these community banks to lean into these areas.
I think it's important to not only be betting on that the regulations might change, but to actually be constructive. And if we can be constructive on the legislative front, then I think that'll be very beneficial and will complement obviously the work that we're doing with the regulators as well.
Let me ask you both here for a bit of feedback as we start to bring this conversation to a close. I mentioned that many of our listeners are involved in the risk management areas within the financial institutions. What guidance would you give them to preparing for these policy shifts, leadership shifts, and staying adaptable, in the current environment? So, any guidance that you would give to them in particular?
So I'm happy to kick things off. I think Hayden brought up a really good point around being proactive, and Ed, you had mentioned leaning in. And I think doing so is really important currently, because we've had to be pretty reactionary the past couple of years. We've had, as AFC, we've had very good conversations, with both sides in the Congress. We've had great conversations with the regulators, including the leadership. But now as things shift, we have to be proactive and make sure that within that larger discussion of financial services, that fintech is ever present, because ultimately, I mean, that's where the future of finance seems to be going. And while we've had some key members in the Congress and some key regulators and even agencies as a whole recognize that fact, with for example, the Federal Reserve having their novel activity supervision program, the OCC with their Office of Financial Technology. We really need to make sure that across the board, both the prudential regulators as well as the CFPB and even the states too, which I think is going to be another avenue that we haven't necessarily discussed in this conversation, but is worth bringing up. There has to be that open and honest discussion, and then ultimately for the risk management professionals that are engaging in the day-to-day onboarding fintechs or onboarding banks. We put forward, actually, we worked with a lot of our members on our response to the bank-FinTech arrangements RFI that was put out by the joint agencies. And in our response, we had a number of leading practices and processes that we identified for onboarding, for continuous monitoring, and those sorts of activities. While there seems to be, a likely reprieve from a lot of the formal enforcement actions and, maybe a re-engaging with your examiners, those practices still should rule the day, and there still should be an active engagement from the risk management professionals to ensure that those practices are put forward and as part of the policies of either a bank or a fintech company, because then that will help reshape those conversations with examiners in a more productive manner. And while they're not getting some of the political pressure that they might have in the previous administration, there can be a real opportunity for those folks to reinvigorate and become more collaborative with their regulated entity.
Ian, you mentioned one item in there in particular that struck me, and we've been having conversations with a number of financial institutions recently who have been pointing out that their state regulators are engaging in a different way. They're not just following suit with the federal regulators, the provincial regulators, and so it's an interesting angle there as well, right? Most of this conversation here has been focused on the federal level, right, the executive, the congressional house, the branches there, but not to be left behind are those state regulators, and really there are opportunities there for them to lean in here as well, and I think that I was with a community bank, about a $4 billion institution recently, who was talking about their interaction with their state regulators, and that the state regulators have an appreciation, a greater appreciation for the impact of that institution on the local community and the state. Right? They had launched a small business administration loan program that was geared towards fairly small ticket. But they were using some fintech technology to power that program, and they received a really receptive audience there within the state regulatory office, because they really saw the impact on the local community. So I think that there's a really interesting angle here of the states leading innovation alongside now perhaps the federal and provincial regulators being a bit more open to allowing that to occur.
Yeah, absolutely. And I think there's some states that will be leaning in on that innovation side of things, and now see it as working sort of in tandem with the federal government. But there's also anytime there's a trifecta in the federal level, some states, whichever state does not swing the way the political leaning of the trifecta, they're going to stand up and see themselves as sort of the last bastion, the gatekeepers of some sort of major regulatory and political overhaul occurring. And so states like New York and California, I think, will become very important for folks to consider at the state level of what's going on with their regulation. They could see a more active regulator within those states, because they're saying we're the last bastion of the democratic ideals, and we want to make sure that we're keeping that moving forward, while the federal government is Republican. And so, that's something to keep in mind, that, to the extent that a bank or a fintech is subjected to the state laws that are, within those jurisdictions, they should probably, be proactive in engaging with those regulators as well.
So I think you shared a few themes over the course of the conversation here, that I'll recap in a second. But before I close with that, um, let me give each of you a closing question here around the role of the American FinTech Council, and how the AFC is positioned to support its members in navigating in this post-election landscape. Right? What is on the docket for you guys, and how you are leaning in here in the coming weeks and months on behalf of your members.
So I'm happy to go from a policy standpoint. I think, in theory, financial services regulation and policy should be apolitical. It should not be the dictate of, good politics overriding and creating bad policy. And so, our view is that ultimately we're here to work with everyone. We're here to work with both sides within, even though the Republicans control the House, the Senate, and the executive, we'll still be working with Democrats, because, as Hayden mentioned, there needs to be bipartisanship. And then on the regulatory side of things, there needs to be a sort of a reconstituting of some key innovation pieces, thinking, for example, of the FDIC's FDI Tech program, that office. And that's an apolitical endeavor. That is not surrounding or engaging with the politics of it all, because we want to see pragmatic policymaking move forward and creating, that sound regulatory framework.
Add on, I agree with everything Ian said there, and just from the perspective of looking to the future and building consensus around these issues. When you walk into a congressional office, or you meet with your a member of your state assembly or legislature, it's about the consumer, and from their perspective, it's the constituents. It's how is this creating access to something that they did not have access to before? How are we creating liquidity options or access to capital? And being prepared to demystify something or clear up misconceptions about it if they lump it in with another area of the tech sector, let's say, being able to come forward and share those stories as first a community member, but then as an advocate, either through an association like the American FinTech Council, or as a business, as a representative for your business. So from the AFC perspective, it's about offering those opportunities to our members, but also doing it on behalf of our members if they're not able to, or they're stretched too thin, or whatever their circumstance might be, as Ian said, at the state and at the federal level. Because just because one party won in November means that there's going to be an equal and opposite reaction at the state level at the same time. Being, again, proactive and being able to come forward and tell those stories about why bank-FinTech partnerships are important is important.
Gentlemen, thank you very much. Right, there's a few key themes that I jotted down here, beyond the obvious ones of shifts in the regulatory regimes, but some of these other concepts about perhaps if enforcement actions are less out in the open, right? There's less information out there. There's less guideposts, right? Maybe one of the implications. And so, especially in an environment like that, being proactive is absolutely key, right? You both mentioned being proactive a number of different times. That clearly is the right recipe, right? Whether it is with the provincial regulators, state regulators, and building those bridges, right? You mentioned the concept of bipartisanship a few times, and things being apolitical, and I think that's a really important theme for folks to remember. This is a long game, right? Right. Things shift one way and then they shift the other way. and you have differences between, right, a trifecta at the federal level, and then perhaps at the different state or local level. And so I think that it's a good reminder for folks to not get overly caught up. Clearly, there needs to be, you know, awareness and responsiveness to, you know, immediate changes, but taking that long view that this is meant to be apolitical. And hopefully, one of the things that happens is that, right, there's an appreciation of the importance of innovation, right? Whether it is in some of these offices really getting reinvigorated at the federal level, or some of these leaders that are coming into these posts who have demonstrated a willingness to embrace innovation. This could be a very interesting time for folks who are operating in the area of responsible innovation, which is clearly. Hayden, Ian, thank you very much. I appreciate it. Ian, you mentioned, I'm closing, I'll reiterate, you mentioned the bank FinTech arrangement, RFI response. Phil and I talked a little bit about it in our prior conversation. I'm glad you brought it back up. It is a great read. I will remind our listeners that is a great document. I joked to Phil that the regulators should just change the heading at the top of the page and put the FDIC, the Fed, and the OCC logos up there, and then that's the playbook. So we'll see if we're a step closer to that or not as a result of the election outcome. But it is a great read, and I encourage all of our listeners to pick that up. Gentlemen, thank you very much. I really appreciate your time and your thoughts, and we look forward to checking in with you guys down the line and see how some of this stuff shakes out in several months.
Thanks so much, Ed. Appreciate it.